Welcome to the Weekly Notebook Review. I am Robert McGroarty. This podcast takes on a bit of a different format where we are live each week on Twitter Spaces. I crack open my notebook and review Hedgeye research with anyone who wants to learn a better way to invest. We feature both Hedgeye power users as well as some special guests that might pop in. If you want to learn more about our research, visit hedgeye.com. If you'd like to participate in the live stream, follow me on Twitter at HedgeyeRJM. Now, let's review the data.
All right. It is September 27th, 2023, the last weekly notebook review for Q3 of 23. Final quarter of the year gets going next week. Should be a fun one. And we're still kind of focused on we're obviously still very focused on cycle to date versus the year to date performance. But it'll be interesting to see kind of where things finish off on a year to date basis in another 3 months. But we're going to run through things here in just a minute. Again, we had a wonderful time at Hedgeye Cares yesterday. Thank you for all those that attended and came out to support all Hedgeye Cares and all the wonderful charities that we donate to. And as Michael Bloom mentioned this morning, we do have Chicago coming up as our last and final Hedgeye regional event in 2023. So that is on November 9th in Chicago. Go to, should be on the kind of website, stuff like that in regards to getting tickets and things like that. Should be a really great event. We actually killed, or we're not doing Miami like we did last year. So we're just sticking with 2 regional events this fall. And then we'll kick things off again with Hedgeye Live, in May of 2024. So always fun seeing all those subscribers out there and folks that come join us. It's really wonderful to meet everybody in person. So hopefully if you can make Chicago work, we'd love to have you there and see you. So let's dive right into it. I think the big one on the board is gold. Gold is yucky. But as my boy Chris just texted me. So we got that bad boy was making lower lows and lower highs. Actually, a lot of the kind of the kind of precious metals and base metals complex that we get in the risk ranges. So you got gold, copper, silver, all making lower lows and lower highs this morning. Gold remains bullish trend versus copper and silver, which are both bearish. So in terms of kind of hunting ground and adding some shorts to that side of the book, it's a good way of having our energy longs on the one side and then some base metals and or kind of silver, platinum on the short side. So kind of look to maybe add to those on a bounce on a green day. You can kind of have, again, it's always trying to balance out your long and short book. Energy and oil in particular just continues to move higher. Again, putting in higher lows and higher highs for feels like weeks on end. But as Keith mentioned on the macro show this morning, it might have been the macro show or the call, kind of forgetting this morning, but basically that low end of the risk range is a titch over 89. So really kind of even from an immediate term standpoint, the price action appears, or certainly coming into today based on yesterday's closing prices, it had us the low end of that risk range only getting down to basically the low 89 range. So again, basically call it roundabout for 90. And I think with this move higher today, with this price moving up to 93.72 currently, you're likely going to see that low end of the risk range continue to move higher, and basically keep catching up with the way that oil, and in particular crude oil, is acting. The other interesting one today, and obviously it's having a bit of a ripper, up almost a little over 9.5%, would be natty gas. Keith got booted that one from his macro, his ETF re-rank product, or kind of the long-only portfolio, the Mucker family office yesterday. So it will be interesting to see. It's currently neutral on the page. Did put in a higher low, but a lower high this morning. And so again, that's kind of a signal that I'm watching closely. And again, just kind of to perhaps, the reason why Keith added it, I believe that was last week or the week before, was because to kind of expand the energy exposure in the book, right? So I think that is certainly one way of doing it. Again, and kind of having these potential laggards, kind of the natty gas and perhaps some others, kind of continue to follow up the chain there, right? So keep an eye on that, I guess. Not sure where the trend line is, but would be interesting to see kind of, if that goes bullish trend, perhaps another thing to kind of add to get some more energy exposure. Just to remind you guys from last week, we mentioned it, but basically the nowcast model did flip to basically 3 quad 3s in the next 3 quarters. So we got a quad 3, it flipped from conditional probability from quad 4 to quad 3 in Q4 of 2023, and again, and the quad 3s Q1 and Q2 of next year have been on the page for a while now. But just kind of wanted to remind everybody that we got that this inflation trade certainly appears as though it still has a few quarters left in regards to legs, or at least higher for longer. Same with rates, right? So higher for longer rates, higher for longer for inflation, with growth slowing, and growth can be really, growth slowing can be, or quad 3, again, like growth slowing is the big piece here, and the momentum and to the downside that we continue to see across U.S. equities and now also European equities is continuing to continue to move to the downside, I guess is the best way of saying it. And so that momentum is picking up. I think growth slowing. Earnings season is going to start up in the next couple weeks here. So it's going to be interesting to see kind of how kind of reality companies will start to report. Could they find some footing here in regards to an outlook or I think it's just going to be really interesting to kind of see what CEOs and what management teams are going to say on their earnings calls as we from a nowcast standpoint are continuing to see basically 3 quarters of growth slowing with inflation staying sticky and higher. So watch out for that. The Red Eye Green Eye app temporarily went to the snooze button about mid-morning here, but then did go back to sell. And so we're still, Keith's signals. I'm assuming he saw kind of a volatile kind of structure that dictated that kind of bounced back up to 426 on the SPYs was to be sold, and that was a good decision today. But with a notebook review, as we've talked about in the past, this is all about kind of looking at the signals today, how they shifted from our weekend work, what we're expecting kind of coming into the week, and then how are we going to kind of start to position and make decisions in the portfolio for next week, next month, next quarter, et cetera, et cetera. I think the big one here on the page is gold. That's why I kind of mentioned it. So it's, as I said, it's down pretty sizably, and I think although it was looking better, and I think I mentioned it probably 2-3 weeks ago here that or Keats has had a minimum size position in gold, so not a huge position, but certainly a minimum size position. He's keeping that position on, but certainly with this breakdown, I mean, I think on the macro show today, he says if you don't want to make that decision, if you want to get out of gold, that's your prerogative and your decision making from a risk management standpoint. I think so just be conscientious of that. We added gold back in November of 2022, and this is a full cycle investing process, right? And something that we need to, or not that we need to, but that's something that we're risk managing, and a 2% position on gold is going to kind of break the bank. But at the same time, the momentum is down to the downside, and with volatility up, right? So and it's up on volume or down on volume as well. So keep an eye on that. That's not really a buy the dip situation. We are right down at the low end of the risk range, but as I mentioned a few minutes ago, that was a lower low and a lower high on the risk range. So keep an eye on that. Keep track of that gold price. I think that's going to help kind of just kind of help you risk manage that position. And if it's not at a minimum size, I would be certainly taking the small loss now before it potentially could get bigger, and reducing that overall size to gold. And then same thing with, I think there's a question on Macro Show about gold miners, right? And the longer term tail kind of duration in regards to having exposure to gold miners. I've said this a couple times on the notebook review, but that out bucket is really helpful in regards to tracking kind of things that have been removed from the risk range on a daily basis, but you're still getting the trend signal, right? So GDX remains bearish trend. I think last week I said almost everything had flipped to bearish trend, and now it is, right? So XLRE, GDX, XLP, XLI, Pink, ITA, XLF, XLV, all those are in the out bucket. All of them are bearish trends. So again, there's just a lot. There's not a whole lot on the board that is gaining signal strength. The two that are, I already mentioned energy and crude oil, but certainly VIX. So volatility itself, huge, big higher low and a big higher high this morning at 15.23 to 19.68. So again, that top end of the risk range is creeping higher into the close to the 20 range. That next, but certainly well inside of that kind of 19 to 29 band, which we call the chop bucket, right? So VIX right now is sitting at 18.98, just kind of knocking on the door of the chop bucket. And yes, so we're no longer in that kind of like low teens investable tight vol range. We're in that, as I said, 15.23 to 19.68. So that vol structure is certainly, or that VIX structure, excuse me. And then in conjunction, if you're tracking the VVIX, that is down slightly today, but certainly quite elevated from where we were just about a week ago, down in the, what was that, kind of like closed at 88.05. So we're now sitting at 102.83, and really kind of one of the higher levels that we've seen in the last few months here. So just kind of keep an eye on that. Keep an eye on the VIX, keep an eye on the volume. It's all about price, volume, and volatility. The other one that had put in a big higher high is that dollar. So the US dollar continues to just absolutely kind of go gangbusters. Again, kind of similar to oil. Can't find a down day. Dollar is kind of doing the same thing. So pretty interesting, kind of where we came from in kind of mid to late July there, down at basically 100 on the DXY to 106.68 this morning, or this afternoon here. Kind of, again, I don't want to say through the top end of the risk range, but certainly pushing that top end of the risk range higher, because it is dynamic. But that top end of the risk range was 106.55 this morning. We're now sitting at 106.67, so 77. So again, those in terms of signal strength, crude oil, dollar, VIX, all gaining signal strength. And the other interesting thing too is the rate complex, right? So Keith has talked a lot about this in the macro show. Early looks to call the last week plus. I'm sure it's going to be a huge topic of conversation tomorrow on the macro themes, the Q4 macro themes call as well. But that 10-year, just the top end of the risk range, again, putting in a higher low and a higher high on the 10-year and the 30-year. 430 is where we can get to on the low end of that risk range. We're pushing up against the top end again this afternoon. So just kind of keep a watch on those signals. Basically the bond market is telling Powell that regardless of what he does or what he did last week from the FOMC meeting, pausing rates, that we're still kind of moving higher, and they're gonna almost maybe, and not force him to perhaps raise rates, but certainly the higher rates are a matter of fact, and that's what's happening in the actual market, et cetera, et cetera. So I think the other component here on the 2-year was interesting that the 2-year did put in a lower low and a lower high on a day-over-day basis, but that low end of the risk range is still only at 4.98. So we're basically talking, call it 5. 5 to 5.18 is the top end. So pretty tight range there on the 2-year, which I think is kind of interesting, and perhaps where the reason why you're getting that yield curve to basically uninvert a little bit, right? So we're only sitting at negative 0.527, and that's kind of basically, if we look at it from late July standpoint, we were down at almost negative 0.90, right? So 893 to be specific. So big kind of move in the yield curve here. 10 years picking up steam, while the kind of 2 years staying relatively flat. So yeah, So that's kind of things that I've seen on the board here. Tesla, in terms of like U.S. equities, individual, what are we calling it? Like kind of the elite 8. Used to be the Section 7, but we added NVIDIA. So Tesla, again, a lot of them putting in lower highs across the board, actually, lower highs. So lower highs on Microsoft, lower highs on Apple, lower highs on Amazon, lower highs on Meta, Google, Netflix, Tesla, NVIDIA. But I think the Tesla one in particular is kind of standing out to me in regards to losing signal strength. Google, I just actually heard Keith sit at my desk before jumping on. He's on a call with some clients, and he said that Google is actually pushing against trend. So keep an eye on that one. And I think what you've seen across the board is as trend, as kind of trade and then trend lines fail, the market really sniffs that out and punches it lower. So you saw that kind of with NVIDIA, right? So NVIDIA basically for the first time since we had we've been tracking it on the risk range, went bearish trend and all of a sudden, basically saw it go from 480 to 418 here today. So again, keep an eye on these things as the trends kind of shift or the phase transition occurs. The only two that remain bullish on the board are Meta and Google. So if Google kind of loses that momentum, regardless of kind of what kind of perhaps the data out there or the actual fundamentals, you could see Google basically pick up kind of downside momentum as well. So I think the other thing that I saw Jonesy tweeted earlier today that the equal weight SPY, which I think is RSP, I think that is, RSP on a year-to-date basis is only up, and it's up. It's basically flat. So kind of an interesting component there in terms of the equal weight on the S&P. It's done pretty much a round trip on a year-to-date basis. Pushed up against 156 twice this year. Once in February, and again in late July 27th, call it. So kind of interesting component there that the equal weight S&P is flat on the year. So see a lot of great friendly faces out there. Why don't if anybody wants to jump up and share, chat, ask questions, that's what we're here for. That's what I'm here for. And again, looking forward to great conversation. Again, thank you for anybody who joined us at Hedgeye Cares yesterday. I did not smoke any cigars, but definitely had some fun on the golf course. Great time. Played with Todd Jordan and David Salem. So just good old fun at Glen Arbor. But let's anybody want to come up, give it a pause, have a drink of water. All right, don't all jump up at once. All right. All right, so here we go. Little Fire, how are you?
What's going on, man?
Good, bud.
Yeah, so just wanted to share a stock. I don't know if it's on you guys' radar. Mattel. Chart looks good. They keep getting upgrades. I think Morgan Stanley gave them an upgrade today, $27 price target. Chart looks pretty good. The Barbie movie knocked it out the park. So I'm thinking that going into Christmas, that might be a tailwind or a headwind. I don't know the right terminology, but maybe that will impact some of their sales for some of their Barbie products. Just wanted to get your view on it. I don't know if you guys have even looked at Mattel. There's a 40,000 stocks out there. I know you guys can't cover them all.
I don't think let me quickly check. I don't think we have retail team doesn't cover Mattel. But from a single standpoint, certainly does look good, and looks a lot different than many others out there. So great call out on Mattel there. Signal, I would say the signal agrees. And for right now, that's definitely one that I'd be kind of taking a look at.
And this is also an idea I'd share with some people. It's kind of a longer term prediction. AI is gonna touch everything, and I'd imagine it's gonna end up touching kids' toys as well. So lately I've been wondering, what could that do for the stock? Because AI is gonna end up in toys. It's just, if it's gonna be in our phones, it's gonna be in kids' toys. So that could be kind of a bullish situation. I know it's a prediction, and you can't hang your hat on that, but I am willing to bet that it does impact the stock over, say, in the next 10 to 15 years. But I just wanted to share that with you. And also, somebody's impersonating Steve on Instagram.
Oh, really?
And yeah, I'll send you a picture. This guy was trying to get me to join. I don't know what it was, but I'll send you a picture. And
yeah, please. Yeah, I knew. Yeah, please. Yeah. We don't want that. Yeah, thank you. Yeah, so shoot me a DM on Twitter, and I'll make sure that gets flagged. Thank you, bud. So yeah, Mattel. Yeah, I mean, that's a great call out. I know, Hasbro has been something that I've been kind of looking at. I think the signal have been looking good on Hasbro, but kind of recently broke down. So I think Hasbro and Mattel, look a lot different from a signal standpoint. So yeah, I mean, again, I don't really know the fundamentals on Mattel, but just from a purely kind of signal standpoint, certainly looks good on the page. So yeah, well done, good call out. All right, we got Leo coming up. Hey, buddy. How you doing, Leo?
Hey, how's it going?
Good. How are you?
Good. Yeah, it was me. I'm impersonating Keith. I'm doing a Miami show, as you know. I'd keep that, where the show will go on. We will be in my...
I know. I laughed so hard when you DM'd me that this morning. I was like, hey, as long as I get an invite, I don't really give a shit what you guys do.
Yeah, I'm like, Keith, you don't have to be there, buddy. We can go. Like, it's all right. Like, the show goes on.
Exactly. I hear you. I mean, it was a very popular conference, but we had to kind of make some tough decision there, and so yes, unfortunately,
there's always so much things you guys can do. I get it. So,
yeah.
Question for you. Kind of going through, what would have been a sideways to down, for Hedgeye, the first part of the year. I mean, how do you think that rallies together? And obviously Keith went to had the Ireland thing, and then he kind of came back, and we were, a little bit more out of the bullish side, but obviously still very much understanding where the macro side was. How do you think that brings you guys together more or less, as a group, and now kind of seeing it play out here into the fall, a negative type market move, and obviously macro is still getting worse and all that?
Yeah, great question, Leo. So I think obviously looking back, right, you can always kind of assess the moves and decisions that were made in the moment, and kind of and see where sort of the mistakes were being made, right? And so that July, and he's mentioned it a couple of times on the macro show. I mean, going into kind of that July period and going into kind of that month end, it was tough, right? I mean, it was things, it was just a tough kind of risk management, portfolio management kind of time frame. And I think what the guys have done on the macro team is they've tweaked the nowcast model, and they have looked at it in terms of how to incorporate kind of the base effects, and to maybe kind of like smooth out a little bit more of the very, again, you can't like just ignore the COVID period, right? But how do we kind of like better manage and better incorporate kind of the fluctuations there in terms of what's what transpired, right? Like the huge basically growth that occurred on the GDP side, right? So I think that's been they kind of started tweaking that really when we did I guess it was kind of released to everybody on the mid-quarter update that happened just in September a couple of weeks ago. And so yes, I mean, I think that's a big one, right? And on that, Leo, I'm almost positive you're Macro Pro, but for anybody that's Macro Pro sub, you can see the monthly, right? So we're kind of laying it out on a monthly basis in regards to what's transpiring from like a GDP inflation standpoint. And I think that shift and kind of tracking it and sharing it and showing it with all of our, clients in that capacity. I think that's going to really help in moving forward, right? So I think if we do get say a government spend month or quarter, it's going to be, we're going to be say a bit more on top of that, right? And understanding, what's transpiring. So, at the end of the day, though, I mean, the VAST, right? The volatility adjusted signaling process from Keith, I mean, that's what drives everything, right? So I think that signal is in Keith, I think has done a great job and it's basically in August and September here of risk managing things across the board, right? I mean, we've been bullish Japan, bullish India, bullish energy, uranium. I think since we added the TTF Pro is up 20+%, right? So I don't know where it is today, but there's been some really, really great, great decision making that's occurred over the last 2 months, and again, I know that doesn't make up for perhaps the 6 months before, but changes are happening, and I think you can see that, and hopefully you can see that in how your portfolio is performing as well.
Well, I mean, I think a big part too is, just how quick you got away from TLT, work for Reddit.
Yep.
And none of us are the carnage of that. And then bringing PFIX into it, 90 days up 50%. That's freaking insane. Just saying that out loud, obviously, you trim into that, but then at a certain point, you just kind of let it tail off and see what it wants to do. Yep. But whatever was whatever, and missing on some tech stocks, 50% in 90 days is probably better than most NVIDIA moves or anything, right?
Yeah.
So.
Yeah, no, exactly.
And so the surprising, sorry for interrupting.
No, it's good. The other thing too, Leo, PFIX obviously great exposure, but he wrote about this in the early look on Monday. But every decision you're making now has to compete with that risk-free rate of, call it, just rounding it off at 5%, right? So kind of every decision you make in your portfolio, you need to make it with kind of a high probability outcome and conditional probability outcome of returning at least 5%, right? So I think that's something that probably we haven't talked a lot about here on the Notebook Review, and something that I just wanted to, that you kind of triggered in my brain, Leo, so thank you.
Well, the interesting thing that we haven't really experienced since 2012, which is, I'm old, sorry, but we haven't had statement risk from bonds in quite a long time. And the fact that people are going to open up their statements at the beginning of next month and see their treasuries down 13% for the quarter is going to, and obviously you don't have to use the word believe, but a lot of times happens to bring another round of selling into it, right? Get me out of this. It's only paying me 3%. I'm down, 15. What are you doing? Mm-hmm. So that'll be interesting to see kind of what transpires over the first 15 days of October with the statement risk people having of seeing losses. The other thing that's surprising to me is just the fact that it's oil and uranium and nothing else is really joining the party. You're waiting for copper or aluminum or something else to join, and it's just, those names, Alcoa and FCX, just continue to get hammered. And very happy not to be in them, but it's just, you're almost like waiting and going, okay, they eventually have to start joining this party, right? But I will patiently wait.
Yeah, I know last week I mentioned both DBA and DBB, which is kind of the aggregate, right? The ETFs there for agriculture, and then base metals. DBA is basically broken down significantly, and you've seen that in the price of kind of corn and other agricultural futures contracts as well. Base metals is kind of hanging in a little in terms of the DBB, but certainly isn't really, to me, again, just kind of to piggyback off of that 5% risk-free rate comment, really isn't kind of one at the moment where I would be to your point, like it's just not really joining the party in a meaningful way. So the copper itself is as I mentioned a few minutes ago, lower low, lower high, bearish trend, and just like basically every time it looks like it's going to kind of catch a little bit of a bid, like maybe like that was kind of 2 weeks ago, kind of like around the middle of the month, just kind of like fails, right? So yeah. Yeah, but and again, and Leo, you're on mute, but I don't know if you were on the call when I talked about natty gas, but I mean, keep an eye on that natty gas signal, right? Currently neutral on the page, up over 10% now today, almost 10, 10.5. So keep an eye on that one. That could be that next sort of energy kind of, general commodities exposure that joins the party.
Right on. Thanks for everything.
Yeah, absolutely. That's a tough loss for Notre Dame, Leo, on Saturday.
Okay, we're not talking about that. We need.
I'm not, dude. I was like, it was a tough one. I'm a huge ND fan. Man, there hasn't been one like that one since basically the what was that? That was the Bush push, right? Anyway.
It's you only have 10 men on the field. It's just crazy too, and just kind of makes you throw up in your mouth a little bit. But it'll be tough to swing into Duke this week and see where they're at. Like I know if I was a gambling man, I would think that Duke probably wins because it's just what an emotional crush.
Yeah,
like just
at least covers, right? At least covers. Yeah, it's gonna be a fucking tight one. Yeah. Anyway, all right, back to markets. Now I'm just getting sad. The good thing is the Arsenal squad. Arsenal squad is definitely on the rise. I bought low on that bad boy. Thank you to Chris Boyer out there. But
well, here I'll set you up nicely for the next one. So, in a year that we've seen a lot of like the big names, Target, Disney, get just absolutely hammered. Nike, obviously. It just becomes a question of when they obviously Nike's already signaling a buy according to Brian, but you just probably have some 5 to 10 year buys here that just look incredible. And obviously you have coverage for all of them. It'd just be interesting to see kind of when they start to peek their head up a little bit and stop being such shitcoats.
Yeah.
I think I said Horizon too, right? But that'll be on the list too. But
no, exactly. I think that's a really good comment. That's where Amazon basically rolled over, right? And then kind of my commentary on Google, right? If it breaks trend here, you can see it kind of do exactly what the others have done, like the NVIDIA and Amazon in particular, Apple, et cetera, et cetera. I mean, they've all Amazon was up at 145 not too long ago, and so we're now trading at 124. It's a big move, and the when the kind of momentum shifts, the market's saying that like get me the fuck out, right? So there's definitely some things that like a CG, right? That's a Constellation Energy. There's definitely individual names out there that are kind of that are acting differently than some of the big boys. And I think Leo, to your point, that's where the signal can just help so much in terms of takes the guessing out of it in regards to the analyst sector head likes XYZ and we've kind of found a bottom, right? And maybe it goes bullish trade and then bullish trend, and that's exactly right. Or at least we're maintaining bullish tail, right? Or testing tail level, something like that. And that can give you a good entry for the longer term, to your point, that kind of like 3 to 5 year runway. But right now, I think it's the signal certainly is not lining up with a lot of these names. To name your even Verizon. Verizon looks Verizon looks kind of similar to Nike and Amazon. Well, not quite Amazon, but Nike's down to the right. Same with Verizon here. So, yeah. All right. Let's thank you, Leo, for all your questions, commentary. It was awesome. Anybody else got any jump up here? Happy to, let's chat. This is for Hedgeye Nation.
Do you guys look at? I know you said y'all look at India
Yeah.
Have y'all been looking at small caps?
Yeah, like small cap, like as in like IWM or like the Russell.
No, in it's small.
Yeah. No, we're long. Yeah, there's an ETF, SMID, small cap India.
I mean, it's doing good.
Yeah,
It's doing right. Yeah.
yeah. It's not SMID. It's what is it? It's SMID, right?
S-Min.
SMIN,
Yeah,
SMIN. Yep. Yeah, that's been in the book for a few weeks now. Yeah, it's been great. Yeah, small cap India, small cap Japan, Japan value. Those are just Japan itself. So like the Nikkei, and then India. You can do that through PIN or INDA, and then small caps. Yeah, man. Great call out. And that's the beauty of going anywhere, right? And three Emirates a week or two ago, right? So just kind of expanding out on that that energy trade. We got out of Vietnam late last week, and that turned out to be a good, really good decision. And so yeah, I mean, I think just like having that rotation, trying to again just kind of lighten the. Hey, DBL, how you doing, man?
Hey, yeah, thanks for having me up. I'm
Yeah, absolutely.
been with Hedgeye for a while, and I recently a lot of times I listen into your notebook spaces, and they're helpful. And
Glad to hear that.
particularly some of the commentaries on the monkeys. Being a monkey pays sometimes, but balancing trading with macro is also fun, and figuring out what audience you're talking to.
Yeah.
And I picked up a lot of the oils, levered and unlevered, in mid-July, and so I'm up pretty sizable, non-levered, and then levered. I usually use about 6 to 8 weeks out, 70 deltas on options. How do you balance with the next couple quarters staying in quad 3, when to sort of pull back on some of the profits? Scale in, scale out, I got it. So far the biggest thing I've done, and I realize using moving averages is bad, but things that stay above and ride trends, I stay with them more. I'll say the commentary from Keith, like just recently short term last Friday, when he said, hey, great buying opportunity, I sized back into the position, right? But how do you watch for the trend changes overall? You short retail against it, and put on a pair trade that way. How do you think about that? Yeah, so I was just asking, as the energies continue up and to the right, a lot of the oils, how do you think about putting on a pair trade or a sector trade to de-risk that? Even though, the next 3 quarters is looking at quad 3, and most of the ones I put on are still trending.
Leo, can you hear me?
Yeah, I just don't think you can hear Miguel. The rest of us can hear Miguel, but
I can't hear you guys. But all right, I heard most of Miguel's question about kind of taking profits. So I'm just going to kind of answer it here, and just assume we may have to just kind of end this a little early because I can't hear anything. So not really sure what happened, but gotta love X. But anyway, so in terms of like taking profits, so listen, I think this is where a big one, Miguel, comes in terms of your position sizing. So that goes on both sides, right? Like, so if you're sizing something up and sizing and if you go from mid to max, right? You got your sizing. If something grows bigger than your max allocation, then you're just kind of constantly trimming down. Now you don't have to trim down all the way to your min. You can just basically trim back down to your max. So let's just say, not necessarily an option, but let's just say, an ETF is 6%, it goes up to, just naturally goes up to 6.25 or 6.5. Then you can like just naturally sell 25 to 50 basis points and bring it back down to your 6% max allocation. So that's one way to handle it, right? So make sure you have your max and mins on your options, right? So the same concept, Keith pretty much kind of sticks to about 100 basis points. But again, it all depends on your risk management, risk tolerance, et cetera, et cetera. But if that option goes from 100 to, if it's up, if that exposure, goes from 100 basis points to 150, then you'd be reducing by 50 basis points and bringing it back down to your max sizing. So something's like just maintaining momentum to the upside. You want to try to, ideally you're going to have it on as max as big of a size as possible. And as I said, like as it grows and gets bigger, you're just going to naturally reduce and take those profits. The other thing too that you can do is obviously, I know you're saying your exposure is through options. So, you can just, again, like as they grow, as they get bigger, you can obviously roll those options, right, to lower strikes or better higher strikes, whatever it is, right, and kind of, again, that's going to just naturally sort of help you reduce some of that exposure as well. The other thing too, and I think Arthur has mentioned this on a prior notebook review, but he has used exponential moving averages on both basically a shorter duration, 15 to 21 day for kind of more of that trade, kind of mimicking that trade line, and again kind of like 63-ish days or 63 days on for that trend. So the exponential moving average could be something as well that could help you, but obviously not the same thing as a signal of the VASP and that kind of stuff, but certainly something that I know some subscribers have used as well. So, all right, well, I can't hear anything, so I'm gonna assume everybody just heard that, and unfortunately, we're gonna kind of, I guess, wrap this thing up at the 45-minute mark. So again, apologies for the technical difficulties on my side. I'm not really sure what happened, but notebook review. Thanks everybody for joining. We'll be back at it next week, Wednesday. That'll be October 4th. Yeah, October 4th, probably a 4:30 show after the market close. I am liking these midday shows as well, so hopefully you guys do too. But yeah, thanks for joining. I appreciate all of your time and your great questions, and I look forward to meeting a lot more folks in Chicago and on November 9th as well. All the best. Have a good one. Good luck trading this close.
Don't forget to check out Hedgeye.com to get more actionable investing insights from our team of more than 40 research analysts. And check us out on Twitter at our handle, @Hedgeye. This presentation is informational only. None of the information contained herein constitutes an offer to sell or solicitation of an offer to buy any security or investment vehicle, nor does it constitute investment recommendation or legal, tax, accounting, or investment advice by Hedgeye or any of its employees, officers, agents, or guests. This information is presented without regard for individual investment preferences or risk parameters and is general, non-tailored, non-specific information. This content is based on information from sources believed to be reliable. Hedgeye is not responsible for errors, inaccuracies, or omissions of information. The opinions and conclusions contained in this report are those of the individual expressing those opinions and conclusions and are intended solely for the use of Hedgeye subscribers and the authorized recipients of the content. All investments entail a certain degree of risk, and financial instrument prices can fluctuate based on several factors, including those not considered in the preparation of the content. Consult your financial professional before investing. The information contained herein is protected by United States and foreign copyright laws and is intended solely for the use of its authorized recipient. Access must be provided directly by Hedgeye. Redistribution or republication is strictly prohibited. For more detail, please refer to the terms of service at hedgeye.com/terms of service.